Hey everybody, it's Lawrence from financialthing.com back for the Thursday evening live stream. Hope everyone is doing well. I hope you can hear me loud and clear. And December 2nd, 2021. We are nearing in on 2022. What a strange year this has been, but hopefully better things for the upcoming year in 2022. We've got a lot to get to today. We'll be chatting some peer-to-peer lending news. We'll be looking at what's going on in the stock markets. Cryptocurrency chat. I'm going to show you some cryptocurrency coins that I like. I've been keeping an eye on. If you're interested in that side of the investing thing, which I think everybody should be paying attention to right now. We're going to talk about some news. And look at the trading 212 portfolio, which absolutely has been getting nuked over the last week and a half, 2 weeks, because of the drop in oil. Have a little chat about that, and the negative sentiment that's going on with the new variant. Why this is happening, what's going on, what I think is going to happen in the future. And we're going to look at the trackers, look at the Vanguard Index tracker performance, and just kind of show you what a steady rock this has been through this kind of turbulence that we're seeing in the equity markets at the moment. A couple of pieces of housekeeping. If you have not checked it out and you kind of want to see where I invest, again, not financial advice, but if you go to financialthing.com, there is a link up here on the top called where I invest. And I'll be updating this today for December. This is my peer-to-peer lending portfolio over the years. You can see the return has dropped here, but I also put down all of my allocations right here to peer-to-peer lending. You can see the different companies, the percentages. Ouch, Landy 10%. That one hurt. MoneyThing 7.8%. Some of the disastrous decisions that I made early on in my peer-to-peer lending investing. And then down here, you can see these the current portfolio holdings, index trackers, stocks down here. These are all the different stocks, and the trading 212 portfolio, and then the cryptocurrencies down here. And if you want to become a Patreon member, for as little as 1 cup of Starbucks a month, you can be a Patreon supporter of the website and the channel. Thank you to everybody that has signed up to become a Patreon supporter. As you know, I've been doing this for coming up on 6 years now. Is it 6 years? I think 2015. And, I never ask anybody for anything, but if you decide you want to support the channel, you can do that by going to Patreon/financial thing or bit.ly, and you can also sign up for the Discord server, which I just started. If you are interested in getting onto a Discord for the financial thing where we can all chat in real time, it's a little bit easier sometimes, I think, than the Facebook messaging, which people can miss that. But I set up a Discord server. You can search right here is the address. Hopefully you can see that up in the corner. It is bit.ly/Discord FT. So I will put that in the chat. And you can become a part of the Financial Thing community that we are trying to build here to help each other really learn about investments. I'll just put that in the chat here. Yeah, I think having a community where we can all kind of chat and learn from each other, because I do not claim to know everything. I just kind of show you what I am doing and some of the thoughts and opinions that I have. And other people are more expertise about, things that I don't necessarily know so much about. I learn every day, but there is the Discord channel in the chat if you want to go ahead and sign up for that. I just recently created that. And so thanks again to everybody for being here. Please hit that thumbs up if you can. It helps out a ton. Doesn't seem like much, but it does. Helps out with the YouTube search algorithm while we're live. And quick hi to everybody. Brian is here. in Woburn, Alan Toombs, and Basingstoke. I presume everywhere is very chilly and cold at the moment. I'll be venturing hopefully back to the UK this month, but now we have these new travel restrictions because of the new V variant, so we'll see what happens with that. Hi Dave Dawson in a very cold Stoke-on-Trent. Paul Bagworth is here in Kenilworth. Debbie is in the Cayman Islands, off to the beach after your live stream for a yomp. I don't know what a yomp is. Maybe a romp? John Day in Nottingham. Paddy is here, on board early tonight. Welcome, glad to see you. Annabelle Iron from windy Spain. Mike is here in Southampton. Aki Chap in Accrington. Robert Payton, Hornchurch. Paul New in Stockport. Alan from Worcestershire. Route 79 from Northwest London. David Halls from Stowmarket. Isn't that what they do, the horse racing? Did I get that right? Peter Vince in a very nippy Leatherhead. And Fam is here in London. Stephen Hale in Nottingham. Alan Brooks in Chile Pinner. And let's see. Yeah, if you have any questions or comments, put them in the chat and I will address them. I think Fam has a comment that it seems your coverage of peer-to-peer is getting less and less each week, and cryptos are taking over your mindset. Can we do a balance of both? Yeah, absolutely. I think one of the issues is things are just really quiet in the peer-to-peer lending space at the moment, and I haven't really changed much about my stance on the companies that I invest through. So I don't really think I have much new narrative to share on necessarily peer-to-peer lending at the moment, but as things do come up, I certainly pay attention to them. For instance, I've put out some requests to some companies to bring them on the stream. Capital Stackers is one, Easy Money. And if there's anybody else you want me to try to get on the stream, I'm happy to do that. But again, it's kind of been just really quiet in the peer-to-peer lending space. So I think as other interesting things come in front for investing, this is an investing channel. Yes, it was peer-to-peer. But I've always been interested in and kind of focused on DIY investing, and I do look at different opportunities that come across and really things that interest me as an investor. And I think the cryptocurrency space just can't be ignored at the moment. It's really growing so fast, and it presents just amazing opportunities for those that understand it. So, but yes, a balance is good. That's why we do the stock investing too. We look at the trading 212 portfolio, but totally understand where you're coming from. I do think about that sometimes too. Am I like too focused on one thing and not on another? But guess what? We're going to do the loan pad. The loan pad update. Michael Smith said thoughts on Hyperfund. Yes, go check out last week's video, live stream. I did actually do a Hyperfund run through. If you want to go look at last week's live stream, it's in there. To be honest, it wasn't something that I really was very interested in. I think it was very heavily based on multi-level marketing. In some ways, it was a bit of a turnoff, and not particularly transparent with as far as when you invest in the Hyperfund. Like, your investment isn't shown on a blockchain ledger. And there was a few things that I think were a red flag, but I've heard of people doing really well. And as any investment, it's good until it's not, right? I think there's personally other places that I would put my money within the crypto space to try to get returns. That one just sounds a little too risky as far as the way it's set up, but I could be wrong on that. Time will absolutely tell. Let's go ahead and hop into a quick LoanPad update here, because it has been so long since I have done that. And LoanPad has really kind of moved forward since the last time. I think maybe 3 or 4 weeks ago we looked at LoanPad and they had a live loan number in the high 90s. It had popped over 100 at one point, but you can see here the live loans have really shot up to 123. We have a 44.7 million pound loan book now, with a total loan value of 92.6, an average loan to value of 42%, which is still very reasonable. Average loan size, which I really like this about LoanPad, they keep their average loan size small. They don't have a really huge average size is, like some of the other peer-to-peer lending companies, and that makes it very manageable depending on what's going on. Total number of lenders seems to be growing at a decent pace. And most importantly, again, estimated time to sell is less than 1 day. So if for some reason you do need to liquidate out of LoanPad, you can. The ICF coverage fund, that really hasn't changed. It's gone up a little bit. We still have this loan that is technically in default. So it's something to keep an eye on, that we only have 11,481 left in the provision fund pounds. But, again, not really too concerned about it. LoanPad seems to be heading in the right direction on that front. Also, just a quick shout out to our sponsor, Kuflink. As you know, sponsored the channel on the website, so you can sign up and receive up to 4,000 squid cash back on your first investment if you're a new investor. This is for new investors only. Be aware, terms and conditions apply. So do read those terms and conditions, and capital is at risk. You can go to join.kuflink.com/financial-thing if you want to sign up. When you go to the website, financialthing.com, there is a banner link on there. But yeah, LoanPads are growing in the right direction. You can see too, which is really interesting, how they put average investment per lender. This is not a usual thing that most peer-to-peer lenders will actually show you, but you can see LoanPad has an average lender investment of about 14 grand per retail investor. So I like the way that they're transparent over there. And now they have 7 lending partners. So if you remember when I first started covering LoanPad, it was one handful, but now they have branched out to more lending partners. We had a we had a house crowd update this week. This is going through the administration process. This is dated the 29th of November 2021, and these are kind of Q&A style things where investors want updates on what's going on with the house crowd's administration. And first question one there: can we have an update on the HCPs? What is happening? That is the house crowd property companies. When will we get our money back? This is what everybody really wants to know. When is the money coming back to us? Well, that of course is the magic question that nobody really has an answer to. However, it says Fraser Fernhead. Actually, you know what? I think I can highlight this. I got a funky new highlighter tool. Check this out. Does this work on a PDF? No, it doesn't. Okay. Fraser Fernhead is still a director of the various HCP companies, but as previously reported, he didn't want to continue with these roles and is due to step down on the 30th of November 2021. A replacement director, Michael Hall, was appointed on the 1st of October to take over the running of these companies, supported by House Crowd Property Management, which of course is in administration. Mr. Hall has been appointed as a director of circa 70 companies and has spent the last few weeks appraising the situation. Mr. Hall's main task is to dispose of the remaining properties owned by the various HCP companies with a view to returning funds back to shareholders after all liabilities of the companies have been settled. And I actually did reach out to Fraser on LinkedIn and asked him if he would be up for coming onto the stream, which he politely declined. I think honestly he's very stressed out over this situation and probably just wants to leave it behind him. But however, he does have responsibilities to the investors to do the right thing. I'm hoping this shakes out in a positive way, although we haven't really seen that happen with any of these administrations where these failed peer-to-peer companies have gone through. So do I think that the house crowd is going to have a favorable outcome? Judging by what's happened historically with the other companies, I don't think that. I think house crowd investors are going to lose money. I didn't have a big holding of house crowd investments. I was only invested in one project, which I personally don't expect to get any money back on it. But, oh well, tax loss, not really a good outcome. Just is what it is. But if you are a house crowd investor, you can read these updates that are posted on the House Crowd's website. You'll get an email once in a while that say there's a new update. So that's what is going on with that. Let's see, was there any other? Yeah, only one piece of news on the peer-to-peer finance, which is funny. It's not really peer-to-peer news. And kind of an obvious thing that investors are moving the low yield savings into cryptocurrencies. Study from the investment app Ziglu found that 63% of crypto investors have moved money into the asset class from savings account, and cash ISAs being the biggest source of funds. No real surprise there, because where are you going to move money from? Low yield savings account that your cash is just sitting there getting no interest. So you're going to want to put it into places that are going to get you a possibility of return. Now, as far as other peer-to-peer lending places that I think, are seen to be places where you could potentially do okay. The list is kind of small at the moment, but it really hasn't changed. We're talking about LoanPad, low risk, assets capital. I'm just really very wary of the amount of defaults that I have seen in the manual lending, and also some of the loans that have run into trouble. So definitely keeping an eye on that. I think Lend Invest, again, none of this is financial advice, just my opinion. Places where I invest, Lend Invest has just been doing a solid moves within the company, and the returns seem to be very much on par in the mid 5%. So if you want I would consider it a lower risk place to put your money. Again, not really peer-to-peer lending, but Lend Invest is they applied originally to become a peer-to-peer lending company, but they withdrew the application. But I still consider them to be within the realm of what we look at with the investment. So Lend Invest, I think Kuflink is doing good things. I think Blend Network is still doing good things. Property Crowd, and what am I missing? Unbolted just seems to be a steady horse in the race. They pay, I've been getting the returns fine. I get constant update emails on, when loans default. They tend to be sold pretty quickly because a lot of them are jewelry, precious metals, so they go to auction. They can get sold within 30 days, unlike a default on a business or a piece of property, which can take months to go through the default process. Unbolted has definitely a big advantage when it comes to that. You also have a couple of other companies I think are worth a look. The assets, why is it skipping my head right now? The assets property one, Assets Exchange. I think they're doing something interesting that seems to be heading in a really positive direction. And then Propland, again, those guys over there seem to be on a steady path. So those are really the ones that I've always talked about. If anything new pops up and I see a new company that I think they're offering an interesting product with a good chance of return, because we're all looking for yields, then obviously I would mention it on the stream. But that's really the ones, and that really hasn't changed. The top five has basically been the same for a while. Some of the companies moving up and down in the top five. I think Assets Capital has definitely moved down on the top five due to the default rates on some of those business loans that they have put out prior to COVID. LoanPad has kind of stayed at the top. We've seen some of the other companies, Property Crowd, move up on the top five, but nothing has really changed that much with my opinions on peer-to-peer lending. I think it's a great place to diversify. The problem with what's going on right now is everybody is yield chasing, especially with cryptocurrencies and somewhat stocks too. People are trying to chase the returns, and sometimes that's very hit and miss. I'm going to show you on the Trading 212 portfolio how that can really kind of crush you through times of market volatility. But it's important to sort of have a game plan and just really stick with it. Again, and I have been victim to this, of just kind of moving, chasing the yield. If stock has been doing kind of really like this, and I see a stock that's like that, I have this emotional want to chase the stocks that are doing really well and leave the other ones behind. Although I know the fundamentals of the stocks that I've been invested in that have been doing this are good and nothing has changed. The narrative hasn't changed. Kind of like what's happening with Bitcoin. We've seen some volatility and fluctuations in the price, but the bottom line is the narrative has never changed. The fundamental remains the same. So if you believe in the fundamentals of an investment, then usually it's a good idea just to be patient and stick with it. So yeah, as far as peer-to-peer goes, not really too much interesting narrative or changes. But if you have opinions on what you think is a good peer-to-peer lending company, pop it in the chat. I'll check it out. I always do if there's something interesting. Let's have a look at the news. What's going on in the economy? Again, I always sort of paid very close attention to what's going on in the US because it does trickle down into the UK, mostly because of what happens with the stock markets. We want to pay attention to the US stock markets very closely at the moment. I mentioned this probably several months ago about transitory inflation, how I did not think inflation was transitory at all. And now we have Jerome Powell admitting that essentially he was wrong about transitory inflation, that it is not transitory. It is definitely, anything but that. So we've seen the inflation rates in the US really start to pick up. And, a lot of people have been very worried about this for a while. And also we have to look at the inflation numbers. How accurate are they? This was an interesting graphic that came out. If you go to shadowstats.com, it's showing consumer inflation. Again, this is the US, official versus shadow stats. So this is official, what the government says the inflation rates are. You see this red line, CPI. And then this is kind of what the real inflation is supposedly to be. You can see it's a lot higher. And if this is correct, which I believe it actually is, we are seeing double-digit inflation rates now, which is very, very concerning. Maybe one of the reasons why we're seeing this pullback in equities in the stock market, because people are starting to realize how much more expensive, goods and services are becoming. I don't know if you've noticed this yourself. You go to the supermarket, go to the petrol stations, things are getting more expensive, even though oil has actually decreased. And one thing I do know about prices of goods and services, they never go back down. Once they hit a certain point, that's the base layer of what something costs. It usually doesn't get decreased a whole lot, if any. It usually tends to keep on going up. So again, those inflation numbers are very real. And why we care about that is because this is going to have a big effect on what the economists do, especially, the Federal Reserve, also maybe the Bank of England, to how they look at interest rates, how they look at government money printing. And I think the money printing continues. We've seen really bad economic numbers on unemployment. Last week, I think in the US, over 250,000 people filed for unemployment. Again, it's going to have this knock-on effect. I know a lot of you are based in the UK and you're wondering, well, what does that mean for the UK? Everything is a domino effect. Look forward. Look forward. You want to look forward, and forward thinking is look at what's going on in the US economy, because that will be what affects the US stock market. And that's something we really need to pay very close attention to. This is a interesting graphic that came out. Countries with confirmed double-digit inflation now representing 1.1 billion people. I think this is really sad. This graphic shows, where the inflation is in double digits. You can see here Venezuela at 175%, Argentina 52%. Really troubling world numbers. Very important to pay attention to this because, again, this is why we look for deflationary assets to invest in. And we're not talking about equities, stocks, and things like that. We're certainly not talking about bonds, because bonds are pretty much dead in the water at this point. Really bonds are only just playing sort of a safety net. If there were to be a stock market corrections, your bonds, government bonds, not corporate bonds, your government bonds are not going to retract like US or UK or world equities will. But yeah, looking at these numbers, Angola, 26.5%, Southern Sudan, big problems in Africa. Zimbabwe, Southern Sudan, 51% inflation rate. Yeah, it's pretty nasty. It hasn't quite hit Europe yet, but I think it's coming. I think it's coming, and I think this is why we pay attention to assets like Bitcoin and cryptocurrencies to be, sort of separated from these government fiat currencies that are actually, some of them are imploding. Argentina is imploding. Venezuela is imploding. Some of these African currencies imploding. Angola, it's not going to get better anyways. You can see some of the old USSR countries like Georgia, Uzbekistan, 12%, 10%, Turkey, 20%, Libya. So problems everywhere with inflation. Pay close attention to this. It is important. We've seen a lot of panic narrative. Just look at this guy right here with his British mask on. Very patriotic. Omicron panic is overdone. You've seen this stock market pullback over the last few days over this new variant, and yeah, definitely people panicking. Definitely, it's going to be a short-lived panic, and I think this is a good time if you've got some cash on the sidelines. Again, not financial advice. I always have to say that because just one of those things we have to say. But even JP Morgan, who is generally tends to be on the negative side, is saying the panic is overdone. You can buy the dips at the moment in the stocks. Not that I really pay too much attention to companies like this because they're usually not right. But and here's one where they're not right. And to position for higher bond yields and steepening. Yeah, I don't think you're going to get high bond yields, especially off government bonds. Let's look at the trading 212 portfolios, and we're going to look at the Vanguard portfolio, see what's going on with that. We have had a pretty rough couple of weeks with the portfolio. As you can see, my genius Alibaba trade here, which is now 14% in the red. I thought that Alibaba would be a good buying point at the point I bought in, and obviously that was not correct. Again, shows how difficult market timing is. We went in at £36.81 at 50 US dollars, which, let's click on the right chart here. Where was that? No, I'm sorry, I got the wrong chart. 142.64 US dollars is the buying point. Now you can see we're down to 120. So, I think looking back, would I have made this Alibaba purchase again? Probably not. I think there is a little bit too much geopolitical risk with any Chinese stock, but it seemed like fundamentally Alibaba is a fundamentally good company as far as their profits and their revenues are huge, but you've also got this question mark of China and what China does to a company like Alibaba. But I also think this is one of these stocks could easily 3 or 4x over the next 4 or 5 years if China leaves them alone, which is a big question mark. So risk-wise, probably worth it for the type of returns. I don't really see too much more downside to this. I mean, maybe it could go down to $100, but I certainly see probably $300 being easily achievable in the Alibaba stock. Centrist Energy, again, you can see these pullbacks on all these energy stocks. I mean, look at this. Crazy. And we're still up 90% on this stock, but look at this high over here of 85 US dollars. And this is pulled back to 54. I mean, huge percentage drop off, 17% from here, 65 down to 64, but at its high, much, much worse than that. What is that? 5/8 of, yeah, I mean, close to a 45% drop off. So if you happen to be good at market timing and bought in at the right time, you could do pretty well off this stock. But again, energy stocks and oil are just getting hammered at the moment. But we're still doing pretty well with that. CleanSpark, some of these crypto mining companies have just taken a beating because of what's happened with the crypto market. We're still in the green on them. CleanSpark is a clean energy crypto miner at 5.93% in the green. And then Hut 8 Mining, 33% in the green. And what was the other one? Do we have another one? No, just those two. Comstock Resources here, 24% in the red, another energy stock. Again, absolutely getting hammered. Diamondback, still 4% in the green. Flex has managed to keep its head above water because of this big bump we had up here due to really good earnings. $25, but now down to 21 US dollars. So certainly a pullback with them. Lloyd's is, even the good old steady Lloyd's Bank at 84% in the green has seen a pullback from 50p, actually a little bit higher up here, 51 back down to 46p. Laredo, this was our darling stock, and this has absolutely just gotten creamed over the last week. You see here from $76 all the way down to 57. So November the 9th, so less than a month ago, this stock was flying high at 76, down to 57. Facebook in the red, minus 8%. Occidental Petroleum up 7, but again, pullbacks from up here at $34 down to 29. Palantir, just absolutely really taking a beating. So I would definitely say this is a stock that's on sale here under $20. I wish I had the foresight. I don't really have the guts or capital to buy back in here, but it's certainly not a bad play. Too low oil, 22% in the red. This one just can't seem to make its mind up. It looks like Mount Everest here. Jagged, 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 jagged. Fall back, jagged, jagged, jagged. Fall back, fall back. Down to 42p. We're up at 48. Still hanging on to that, clutching onto the edge of the cliff. Vermilion Energy, which we just happened to get in at a good time. Good buy point of $7.65. Still with the pullback, we saw it go up to 12. It's pulled back down to 10 US dollars. So you can see here over the last month of the portfolio, which now sits a little bit under 15,000 pounds, we were close. Do we ever go over 17,000? We were close, just a hair under 17,000. And now we've pulled back down to 14,009. So pretty volatile swing. And that's just 1 month. And that really shows you how risky it is picking out your own stocks. You can boom or bust. Over the last year, this portfolio has been good. I mean, remember we started at 5,500. But if we were getting into the markets a month ago and tried doing this, we would definitely be in the red. And just to show you the percentage calculator, for instance, on Laredo Petroleum, which is one of our darling stocks, which is now at 57p and $57. A month ago on, if we look to November 2nd, was 74 US. So we've gone 74 down to 57. If we look at the percentage calculator here of what that is, that's a pretty punishing minus 22% loss on that one stock. So again, this is the volatility issues there and the risk that comes along with trading out, into your own stock picking portfolio. So again, 22% loss just on that one stock. Now, if we look at the Vanguard tracker, which I've always said, for anybody that isn't not experienced in buying stocks and shares and doesn't want to be a stock picker and doesn't want to have the stress. I mean, imagine the stress that you would feel now if you had these individual stocks and you had a decent sized portfolio. You're going to be feeling pretty stressful. So if we look at the tracker price right now today, actually 1st of December, this was reported 749 pounds and 50p. This is the Vanguard US index tracker that I've always said was a great tracker to be invested in. If we go back a month ago and see where this was, we had a price of 761.30. So we've had just a minus 1.54% drop. Even with this volatility, I think that number is going to be a little bit lower possibly today, but only a 1.54% drop compared to the LPI stock Laredo, which 74 down to 57. And again, these numbers are highly dependent on what you pick. If you dumped all your money in Tesla 3 months ago, maybe you're going to look at these numbers and go, oh, wow, I'm just so much better off picking stocks than using a tracker. Yeah, if you can get it right, absolutely, more power to you. But as you can see from these different stocks here that I've picked out, maybe not the right ones, but some in the red, some in the green, but highly market dependent, highly timing dependent. You got to be very, very careful. This is why I love this US Vanguard index tracker. 4,073 stocks in the tracker, super low charge, just the fund charge of 0.1% a year, tiny little charge, no trading charges. You can see the result over, let's see, 1st of December 2020 to the 30th of November 2021, 27.27% return. So this tracker has done very well for people that would just stay put and not be moving around. This is a good solid solution, and I think if we look forward in 5 years from now, 10 years, you're going to see the US markets are obviously going to be higher than what they are now, I believe. Historically has been that way. So better than fuddling around trying to figure out which shares out of all of these ones that you could buy, UK, US, there's hundreds of them, thousands of them. Why not just pick one fund that does it all? You don't have to worry about. Your family doesn't have to worry about you going all in on National Grid and then it tanking the next month. Let's see what the biggest, I don't know if we can sort by the biggest losers, biggest winners. That's what I wanted to see. See what's the high volatility. Look at this, Aston Martin down 7.5%. Yeah, I think this is a good way to do it. Just bang it into a US or a world tracker if you believe, you want to put more emphasis on different stocks from the world. I think that's an excellent way to go. Let's talk a little bit about cryptocurrencies. The cryptocurrency markets, again, not really much has happened. We saw Bitcoin pump up a little bit. Again, if you're not a cryptocurrency investor, you just don't know what this is all about. This hedge against inflation with Bitcoin, I think, is real. We've seen these inflation rates. Yes, you are going to have volatility. We've seen it. Of course, it's there. Volatility is your best friend when it comes to investing. If not, you can put your money in a savings account, get 0.5%, dead even, no problem. But we've seen this price pull back now, 56,850. I thought this was going to break out over the last week. We saw it kind of wanting to get over 60K, and it just hasn't been able to break that 60K yet. But I think it's coming, and I think it's going to be followed by Ethereum, which we can see Ethereum has done okay over the last month, but it's still, hasn't taken a massive beat down like we've seen in the past. We've seen some definitely, what is that, a 10% drop, which we've seen Ethereum go 30-40% down at some historical times. But right here, if you were able to get in at 4,000 US dollars, you've done pretty good for yourself. But I think we're going to have a big breakout with Ethereum, and the reason is because it's a very, very heavily used cryptocurrency within the gaming markets, within NFTs, and I would not be surprised to see this heading over 5,000 US dollars over the next week. And yes, we did not hit the 70,000 US dollars in Bitcoin. I think this new variant has put a big damper on everything economically with investments, and sometimes you just can't really plan for things like that happening. But I still think, oh look, we just saw it hop for a second over 57,000. So what else am I looking at? There's some coins that I think are solid. Solana. Again, if you're looking at risk and you want to get into cryptocurrency, Bitcoin is really your safest long-term bet. And then, but I do think Ethereum will outperform Bitcoin, and obviously it's a much riskier play. And I think Solana down here, which is another payment coin solution, will probably outperform Ethereum, but again, higher risk. So Solana, Ethereum, Bitcoin. I think Polkadot is good. It's very much to do with the metaverse and the gaming. If you've been hiding under a rock, you haven't heard anything about the metaverse. Well, the metaverse is obviously what Facebook is pushing now. It's things like communities online, virtual reality, gaming, and Polkadot is a coin that is heavily inside of that sector. Again, Avalanche, we've seen some movement on that. I don't own that. Polygon here, this is a coin that has really done well. Again, heavily involved in the metaverse of what's going on in the cryptocurrency world. So again, much riskier coin. But you can see from down here, we were as low as $1.17 just a little bit less than 2 months ago, and we've seen this run up. Again, you got this volatility, that's okay. We saw a run up here to 219, we're back to 210. I think that's a coin to watch for. But there's definitely some opportunities in this space, depending again what your risk tolerance is. But if you're a beginner, Bitcoin is really the best place to start. This is some of the things that I've been watching here. These are gaming plays. Look, online gaming is going to be huge, especially within cryptocurrency, because people can actually play and earn money. Now, the old school way of gaming was that a company would put out a game and they would make all the profits for releasing the game. The way that the crypto universe gaming starts is that the players can actually earn and make revenue from the game. So this is why people are so excited about crypto gaming, because they feel like they are a part of being able to earn. So it's called play to earn. So, this is a game that I think is pretty interesting, called Theta Arena. And, if you're a little bit more of a risk taker, you can look at these opportunities and say, okay, this is a game that has 2 million players. You can see down here total players. And again, we're very early in this crypto gaming space, but already 2.8 million players. And this game was on the Apple. It was the #1 play to earn on the Apple App Store. So, and I've heard of people making $300 to $300 a day just playing on this Theta Arena. So this is actually a cryptocurrency that you could buy and invest in and sort of hold. Yes, it's going to be volatile. There's no doubt about that. I mean, this is down 24% in the last month. You can see the price, how it's moved from here, 15 up to 16. This is just one day. If we look at the last month chart, you can see this top fall off right here. 20 down to 11. And these are the opportunities. I mean, you certainly don't want to be buying it on this big upswing. You want to be trying to get it in these valleys down here. But you see what the potential is. This has a market cap of $472 million. And I think this could go much higher. So there are opportunities out there in the space if you are willing to take a risk. And what is going on in the metaverse? Look at some of these stories. Someone just paid, and thank you for Mike Powell for sending this. Someone just paid more than $650,000 for a yacht that only exists in the metaverse. What does this mean? This was a yacht that somebody designed, and they sold it. Someone sold it for $650,000 as an NFT. Now somebody owns this yacht within, I believe it's the Sandbox, which is another gaming universe. And why people do that is because these things actually, believe it or not, appreciate in value in some cases, not in all cases. But when you have a big game like the Sandbox or Decentraland, which is another one, people are paying millions of dollars for a plot of land in virtual space. And these places, they are going to be where companies and brands advertise, and kids are playing with virtual reality headsets now in these spaces, and they're earning money and they're buying and selling things. So this person paid $650,000 for this yacht, and they believe that this will appreciate over time, and they will be able to sell it for more than that. Plus it has a DJ booth and a helicopter landing pad. I mean, who doesn't want something like that? So yeah, this is what the virtual land here. You see this virtual real estate plot in Decentraland sells for a record $2.4 million in cryptocurrency. The virtual real estate,
despite supply,
is equivalent to 6,090 square feet of land. So a company actually went in and they bought plots of land worth $2.4 million in this game right here called Decentraland, which you can hop in and play around in for free. People build things inside this universe. And there's even like shopping malls, and there's streets with retail shops, and people lease the shops out to brands. There's going to be companies like the Gap and Adidas, and they're going to rent space in these virtual places to advertise their products and this whole universe. I mean, it sounds so silly, but this is going to be the future of what's happening within the crypto space. Now, I'm sure a lot of these NFTs going to probably become worthless. You can buy horses. Look at this. This is crazy. You can buy a horse here. This is 1.17 Ethereum, so that's over probably about 4,700 US for this digital virtual horse, which this little guy, a version of him, is going to gamble. People are going to be able to gamble on these horse races. Now, that sounds silly, but think about, in the arcades we have these little horses that you can put in a pound and gamble on which horse is going to win. Think about being able to do that from, a mobile phone. People are going to be interested in that. Now, whether these horses will hold their value, who knows? I mean, the problem is there's thousands of them, but this is just an example of what's going on in the cryptoverse and how there's all these different opportunities out there. You can see now 15,134 cryptocurrencies. Probably most of them, 95% of them, will become worthless. It's just a matter of finding the gems if you are into that kind of risk return, because you can make a lot of money, but it is very, very high risk. So Bitcoin, I think, is a place for the majority of us to be safely playing, possibly Ethereum too. So that's what I got for you this week. I think there's a lot of interesting things going on. What do I think is going on with the stock market? Complete fear. It's going to be short-lived. It's going to be short-lived, and I think you're going to see, again, we're in a risk-on environment at the moment. You see oil go back up. Oil is really taking a beating. The governments are just not going to let oil continue to stay oppressed price-wise. So that will continue to go up. And I think we'll see a run in the stock market before the end of the year. So for anybody that's panicking, if you're looking at your stock portfolio and worried about it, just the best thing you can do is hold tight. Just don't make any changes. Don't do anything unless you really see something you're like, wow, this is bad. I got to change this out. But selling right now, bad idea. I think we're going to see a big uptick. In fact, let me look at the markets today because I have not. Let's see what the markets are doing. Yeah, you're right now, even today we're seeing Dow Jones up 638 points. FTSE lagging behind, as always. I don't know why. But Dow up 1.84%, S&P up 1.5%. I think we'll see more of a rebound next week as things start to settle down. There's a lot of panic, a lot of fear with, again, coronavirus and what's going on. I don't even like saying that word, but things will settle back down again. And we will continue business as usual. Let's see if you have any comments here, and then we will go ahead and wrap up. Again, thank you for joining me and listening to me natter on every week. Please hit that thumbs up. Appreciate you being here. If there's anything you want me to cover next time, you can always drop me an email at help@financialthing.com. Join the Facebook group. Just search for it, Financial Thing, on Facebook. Join our community over there, or the Discord server. Let's see. What I find interesting, your coverage of gold bullion. This is something we can explore more. You pay no VAT on gold, but you do on silver, and no capital gains up to $12,500. £12,500. Yeah, gold is interesting. I think we're seeing a lot of money moving out of gold and into cryptocurrency assets because gold just hasn't really moved, and it is definitely a diversification play if anybody is concerned about where we are in the stock market. Which, by the way, I'm going to say it: the stock market's highly overinflated. There's no doubt about that. I mean, some of these company valuations are too high. Even some of the cryptocurrency, I think, is overvalued. But things are not exactly following what they should be as far as with the stock market correlation to the economy. It's not moving the way it should, and it hasn't in a while. So a lot of people are moved out of gold, and they see just these opportunities and taking on, I would say, pretty big risk, not having some kind of a hedge on the bottom side in case the markets do correct backwards. I think gold might be a good hedge to do that. You just won't see, I don't think you're going to see much of a price appreciation this year. Maybe in January you might start to see gold move. There are some talks of, the way that gold is valued, maybe it changing. Who knows? I mean, I think there's a lot of rumors about that. But I kind of see gold to be similar now at this point to owning maybe a US or UK Treasury bond, but not really, because we do see volatility too in gold sometimes where it can move up and down. But I think gold might be a good hedge against the stock market correction. Personally, I don't own a lot of it. I do own a little bit of gold as far as in a stock, but taking my chances, probably taking way too much risk at the moment in the equity markets just because they've been so good. But I have a lot of my allocation in trackers, and I don't think that is going to change unless there's some big sign of risk off, which hasn't happened yet. If the the oil prices continue to stay oppressed, you start to see the yields on bonds start to increase, and you start to see a stronger US dollar. Those are the warning signs. But so far, side of the oil price getting a little bit more depressed, not really happening at the moment. So let me take a look at let's take a look at the markets. Yeah, the Dow's looking pretty strong. I think everybody's just kind of waiting too. Look at the crude oil, 67.02. I mean, that's really come down, but up 2.18%. Some of the natural gas fell too because there was reports that we were going to have a warmer winter than usual. So of course the natural gas market freaks out. Who knows if that's true or not? It's just impossible trying to predict something like the weather. Gold, 1768. I don't think that's spot. That's futures. Silver at 22.4 US. Gold just has really struggled to move anywhere. We just kind of see blah, 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 a little bit of a bump here and then back down again. So I don't know. I mean, yeah, I think I don't think it's a bad thing to have some gold. But I wouldn't certainly hold 50% of my assets in it. Patty is in France. Hi, Patty. Dave Ellard in the fire burning, no cider. Midlands, why do you not have cider tonight? Ken is in Chile Island. Looks like the last of the mini bond scandal is about to break. High Street Group has gone into admin. Oh, another one. Oh, what do we have? High Street Group. Yep, mini bonds. Stay away from them. Stay away from the mini bonds. Dangerous territory. Oops, I almost banned GP events. That was an accident. Pieces talking about LendInvest. They have had very few new loans since the summer, just 3 in the last month. Let's have a look. Yeah, things tend to sort of slow down towards coming up to Christmas too. Oh, I have a little bit of cash in the account just sitting there doing nothing. See when the last... Yeah, it's been a bit slow. Yeah, that's the normal ebb and flow of investing. Sometimes you get more loans coming in, sometimes there's less. But I still like LendInvest. Mike Powell, Elfin Street seems very steady. Elfin Street. Affordable alternative credit cards. You can get a loan for 5.8%. Is that right? 10 million pounds lent. 8 to 12% average returns. Yeah, I remember looking at them a while ago. It looks like an interesting product. I'm curious, how do they charge an 5.8% APR when you borrow and pay out? Let's see here. What am I missing? What am I missing here? Elfin Purse, finance your everyday life. Borrow what you need when you need it, much cheaper than with a credit card. Representative APR 5.8%. But if you invest, you can get 8 to 12% in returns. So there must be something that I am missing. Borrower. What is it? 75% cheaper than an average credit card. Yeah, it's not hard to be cheaper than a credit card. Doesn't really tell you much about the interest rates that you pay. Maybe you can share about how do you get paid so much. People are borrowing at 5. I mean, I would imagine people with worse credit scores are going to pay more than 5.8%. Yeah, Sid, you said property crowd in your top 5 a couple of times. yeah, I did meet crowd property. Property crowd is no longer with us. Capital Rise are very good. You never mentioned them. I know you wanted to interview with them, but you haven't done any coverage on them since. Yeah, I was the reason why I wasn't really too interested in investing in central London property. I just with what happened with the prices, I thought it might be a higher risk play, but I don't have anything bad to say about Capital Rise. They just weren't on my radar. Do you think this is what they want? A total destruction of global markets to bring in a WEF reset and a digital currency? Yeah, it's. I mean, not to get too conspiracy theorist about it. I definitely think it's about control. There's a lot of scary things going on in the moment. I think I just read Germany forced Germany will make jabs mandatory if Angela Merkel gets her way, as certain people face lockdowns again, and we've seen that in Austria. It's just mind-blowing. I mean, what's going on with this whole situation? Yeah, it's really sad. Yeah, I definitely think it's a control play. Eliminate the middle class, control people. You know, who knows? And maybe they want to get rid of the US dollar and reset it into something else. I don't know. Certainly interesting. You know, the problem with YouTube at the moment, they're shutting down a lot of people for speaking about such things. There was this guy that I follow on YouTube who had a doctor speaking about the truth about you know what, and the video got taken down pretty quickly. And the guy who runs the YouTube channel is pretty sizable. He's got about 200,000 subscribers. By the way, subscribe to the YouTube channel here if you haven't, please. Yeah, he's gotten his second out of 3 strikes, and one more strike, his channel gets banned. So apparently free speech is gone. We're not allowed to say anything. I certainly think there's a lot of strange things going on at the moment. Dave Dawson said, how it's comparing to the tracker, Lawrence. How is what comparing, Dave? Tell me what. So it seems like Len-wise, maybe you guys are looking at. Financing UK student loans. Ah. Yeah. This is going to be the next big economic problem, if you're wondering. You know, if you're wondering how people are going to get themselves in trouble, this is going to be the next one. Student loans, those are probably going to implode at some point. Big amounts of student debt with no collateral behind them. Crazy to me that you could go in as an 18-year-old student and accumulate a bunch of debt with no job. I think in the US there is last time I looked, it was such a ridiculous amount of student debt. I don't understand how this can continue. Where is the student debt? Here we go. 1.761 trillion US dollars of student debt. I have no idea what it is in the UK. See if we can find out. Average student loan debt is £35,000. Close to double the amount a typical American graduate is owing. Oh, so here you go. £20 billion loaned to around 1.5 billion students in England each year. The value of outstanding loans at the end of March 2021 reached £141 billion. The government forecasts the value of outstanding loans to be around £560 billion pounds. Get your head around those numbers and tell me that there isn't a problem with the economy. You know, 560 billion pounds in outstanding student loan debt. This is not all going to be paid back. The government expects that 25% of current full-time undergraduates who take out loans will repay them in full. What about the other 75%? So those are not going to get paid back? Guess where that money comes out of? Taxpayers' pockets. And then people say, "Oh, we don't have the economy's fine. Everything is good within the economy." Yeah. Oh, what a mess. What a mess. And they cannot afford to stop money printing now. If you do not understand that at this point, I don't know what to tell you. Capital rise, not really peer-to-peer. I'll have to check into those. Yeah, Cedar's got taken over for 100 million. Yeah, does anybody out there watching invest in Cedar's? Have you made any money? Because I've heard people that email me saying they have these shares that have not increased in price. They've actually decreased. $100 million. Republic acquires Cedar's $100 million deal to create the first global private investment platform. Will commit substantial capital to drive growth in the UK and Europe. I heard Crowdcube is raising money. And Crowdcube is going to be raising money for their business again. Darren is here in Cambridge. Welcome. How are you? Chimpo Naughty. Hopefully you bought some of those ape thingies that came out. Where can we see all the historic values of cryptocurrencies in one graph? I don't think you're going to see them all in one graph, but you can certainly look at if you go to coinmarketcap.com, you can look at individual coins. But you won't be able to see them all on one graph. There's too many. Look, we have 15,134 cryptocurrencies now, and I think look at some of these stupid gains. This pump ETH, 5,802% in one day. Elon Floki, Christmas Floki. These are these coins, just so you understand, complete BS. You know, these coins don't do anything. They're just a ways for you to lose money quickly. Thankfully, I think a lot of people that are not very advanced in cryptocurrency wouldn't know even be able to buy these things. So I might save some people from making a lot of silly decisions, because you got to buy them on these decentralized exchanges and waste of time. But you can certainly look at all the coin prices on CoinMarketCap. And what I like, you can also create a watch list, and it'll send you alerts if you want to get alerts when price falls by 5 or 10%. It'll send you an alert. So if you're looking to get into the market, it's a good way. The Real Wolf of Wall Street said many of these coins, tokens, and NFTs will be as worthless as the penny stocks and jump bonds he was jailed for selling. Yeah, he's right. He is certainly right. wonder if digital horse racing will be rigged as the real thing. Probably not. Probably not. No. Random number. Well, I don't know. I mean, there's going to be ways for them to figure out which horse is stronger. You know, maybe historically which horse has won over the, just which horse has done well previously against other horses. I don't know if the conditions of the track are going to be put into play. It's pretty interesting though. Is Alpha unsecured loans? I presume so, yeah. They're consumer loans. No, Merkel is not in charge, but she still has some pull within the political system. Oh, how has the tracker done compared to my share portfolio? Definitely not as good. The share portfolio has tripled, and the tracker has done 20. I don't have to run the numbers, like 23, 24%. But I also just happened to hit that rush. I think a lot of it was just luck with the timing. If I try to run this trading 2-on-2 experiment over a period of say 5 or 10 years, I fully expect I would probably lose to the tracker fund. My CEDA's portfolio is up 30.36%. 0.36%, 17.09% XIRR tax adjusted. Your thoughts on VAT loans? My thoughts on VAT loans are it's pretty simple. If the company pays the loan, I don't know. To be honest, I don't really have much thoughts on VAT loans. Let me look at it real quick again. I did look at it about a week ago briefly. Hang on. Let's see what PropLend is up to. Oops. Commercial property VAT loans. If you're buying commercial property that is elective of VAT, you need a fast and flexible solution to fund and recover 100% of the VAT payable to HMRC. PropLend compliance, 100% of the VAT payable. VAT adds a 20% cost to the purchase price. Then work on your behalf to recover it from the HMRC. Huh. Understandably. That's interesting. So they loan somebody the VAT to purchase property, and then they work on the behalf of the borrower to recover the VAT from the HMRC to redeem the loan. It's interesting. It makes sense if you're going to free up capital. So they're going to do loans from 100K to 2 million. 0.33% a month. It's like a little bit over, what, 10% a year? On a £1 million property purchase, it can free up 200 grand of immediate cash flow. Well, use the added 20% VAT levy to purchase could put additional pressure on your cash flow, as HMRC can take up to 120 days to refund any VAT reclaim. Yeah, I mean, it makes sense. Obviously, if PropLend can, they know they're going to get this money back. I guess they'd have to be pretty sure that they can. But if they're pretty sure they can get the money back, I don't know too much about VAT reclaiming on commercial properties. But I would imagine PropLend knows that they can get this money back, so it may be a no-brainer for them. And they can probably do very short-term loans. 0.833% a month isn't going to really kill anybody. So I guess it kind of makes sense. It's an interesting concept. Start out small. I would say whenever, whenever a peer-to-peer lender is starting a new product like this, best just to start small. See how it goes, test the waters. All right. Well, I think, oh God, is it really, you listen to me waffle for an hour and 22 minutes. You must be insane. I think that's going to do it this week. Thank you to everybody. I may take the Christmas week off this year. I don't know yet. But certainly be back next Thursday, 7:30 p.m. UK time. Again, thank you to Kuflink for their continued support of the Financial Thing YouTube channel and the website. Please go to the website. Hit that subscribe button if you're not subscribed to the channel. And thank you again to everybody for being here. I love every single one of you and all your comments. And, you bring a lot to the community. And again, I don't know everything. I don't pretend to know everything. I'm always interested in learning. And I do appreciate everybody's input. As I continue to find new opportunities for us to make passive income and yields. By the way, one last thing. This little air quality miner has been reducing its rewards, but it has still been performing really well. And I don't know how long these rewards are going to continue for, but so far they can return about £200 for 1 month in Planet tokens. So I'll let you know how that's going, if I think it's worth you doing it. Depending on what the reward situation is. I got to do some more research into that, but that will do it for this week. Thank you very much to everybody. Have a great night, and we will see you all next Thursday. Be safe. Have a great weekend, and catch you next time. Take care.